So it's the end of the year again. Your accountant is not responding. We don't have great tax strategy in place, and you're scrambling. It is now October 2025. Deadlines are coming. More revenue is coming for this year, and you don't have a clear picture on your tax liability. This strategy we are going to go over today is going to help you not necessarily reduce your taxes, but give you a position to potentially put in a tax plan in the time that it takes to set this up into next year. What does that mean? You can adopt this strategy, put it together, push the income tax liability into the next year up until November of 2026. Now, whatever year you're in, it's generally a 1-year punt, November to the following year. Mind you, this is not tax strategy. This is not tax advice to you, purely for educational purposes. We don't know your situation. Our accountants haven't sat down with you to go over strategy. This is for you to purely learn. If you do this on your own, I don't recommend that. Probably get yourself in trouble. But nonetheless, let's jump in today. Look at this quick schematic graph we have put together. Talk about your situation and if it makes sense to do this for you, because you're finally ready to put in a tax strategy. You're finally ready to join a team who will sit down with you and strategize with you every year to hopefully drop your tax liability 80, 90, and in some cases, even 100%. Now, today's figures are at the $10 million annual revenue for this company. You can scale it up or down based on your company's revenue, your current situation, and whatever you're going through. So let's jump in. Okay, here is the schematic diagram that we are going to be discussing. The main thing we're going to be here is a main public operating LLC. No matter what that is for you, it could be a welding company, medical sales, manufacturing, whatever your industry. We're going to say you're doing 10 million of profit. This means you've already taken your deductions, you've already paid your kids, you've already structured their accounts to pay them effectively. This is all your lease agreements are taken off from leasing vehicles to your company, equipment depreciation. And at the end of the year, you are left with $10 million of profit. In Arizona, that looks to be about a $250,000 annual tax liability to the state. And then we look like about a 3.614 million federal income tax liability finishing out this year. Now we are in October. So maybe you have end of year contracts coming in. Maybe that would boost this. So everybody is in a different spot. But right now, instead of getting to the very end of the year where it's hard to make decisions, get things going, get entities structured that require detailed planning, estate planning, this is a strategy to push into the next year and punt the tax liability into 2026 and deal with it in the following year. By then, hopefully you could put together strategy, put together entity, put together lease agreements, intellectual property agreements, royalties, loans, debt repayment programs. Right now, what we're going to illustrate here is what is called the C Corp Management Service Agreement. And that's what an MSA is, a Management Service Agreement. Now, the interesting thing about C corporations is they file what is called fiscally. So you can set up your tax year November to November, which we do for a lot of our clients when we structure this C Corp strategy for them. That allows you to pay a C Corp this year from your company to that C Corporation and delay the tax until the end of 2026 in November. In the meantime, hopefully you put together a team to come in, surround you, and really help your bottom line grow. Take your legal and lawful deductions, structure your company accordingly to be the most tax efficient, and this is the system. So what we have here is a management service agreement contract. This is a physical contract that is signed between the operating company and the C corporation. If you're paying your kids, one of the things that our clients do is they'll set up a family management company, usually an LLC. They will pay that LLC through contract. That LLC will pay the children directly. A little bit like that, but also a little different. So a management service agreement can deal with marketing, strategy development, campaign management, budget and expenses, oversight, vendor and media, coordinating performance, analysis, cross-function collaboration, administration, financial oversight and bookkeeping, payroll processing and distribution, HR admin, vendor and contract management, compliance and regulatory support, operations consulting, insurance management, strategic planning assistance, and administrative support. So those are the tasks that the C Corp will be doing that they are actually getting paid for. This isn't a money movement for the sake of moving money. We are paying this C corporation to actually perform functions for our main operating company completely separate. There is no relationship there. It is purely company to another company legally. That is the strategy. So for this illustration, $6 million would get pushed over to the MSA. The C corporation would take that $6 million, leaving the profit on the main operating company at around $4 million. So this year we can pay tax on $4 million instead of 10. Next year we can deal with the C corporation, what it's doing, its management services, refine those, whatever we need to do to maximize those. And now we can go into 2026 or the following year and hopefully put together a tax plan and a estate plan, cash flow income strategy. By doing that, get super efficient, but we're already late into the year. You've probably missed the boat for serious tax planning strategy. And because of that, this is the strategy we use for our clients at the end of the year. Our accountants are the ones who file these. We work with a very prestigious company to structure the C corporation, pull the EIN, maintain the corporate veil, all the annual compliance on your behalf. And for that, this strategy has worked seamless for our clients. If you're at the end of the year, you're struggling, maybe this is a strategy for you. If it makes sense, reach out. We can walk you through the process, look at your exact scenario, and see if it makes sense. I hope you found this video amazing, and we will see you on the next video. Make sure to subscribe or share this video with somebody who you know is struggling at the end of the year, doesn't have a good strategy. We'll see you on the next video.